You are listening to The Vocal Technologist. Spoken Tech for your ears.
Welcome back, everyone. Today we're jumping straight into some really significant moves happening across the crypto landscape.
Absolutely. We're seeing major institutional plays, big infrastructure shifts, and even some serious security questions popping up.
Yeah, exactly. We'll look at Ethereum's huge institutional boost, what stablecoin issuers like Circle are building, Stripe's bold vision, and that Monero hashrate situation.
And it's fascinating how linked these all are. It's not just random news, it's pieces of a bigger picture about where crypto is heading. Understanding this is, well, pretty crucial.
Okay, let's kick off with Ethereum then. The numbers are just, wow. U.S. spot ETH ETFs saw over $1 billion in net inflows in a single day.
$1 billion on a Monday, no less.
Right. BlackRock and Fidelity leading the pack. Total inflows since May are what? Nearly $11 billion now.
$10.83 billion, yeah. And look at the price. ETH up 45% in the last month. It's impressive.
It really is. But beyond just the big numbers, what's the deeper signal here? What does this tell us?
I think it signals a real shift in conviction. It feels less like pure speculation now and more like institutions seeing Ethereum as like foundational digital infrastructure.
Like the early internet plumbing.
Kind of, yeah. There seems to be growing comfort with its regulatory outlook and its core role in DeFi and Web3. That's a big change from even just a couple of years back.
Okay, and speaking of building new foundations, Circle's move with Arc. That sounds ambitious.
Oh, it is. They're launching their own Layer 1 blockchain, Arc, EVM-compatible, which is key for integrating with the Ethereum world.
And it's specifically for enterprise stablecoin stuff like payments, FX.
Exactly. Enterprise payments, foreign exchange, capital markets. And get this, USDC, their stablecoin, is the native gas token.
Oh, interesting. So no need for a separate token just to pay fees.
Right. Plus sub-second settlement and optional privacy features. It's designed to be super efficient for businesses.
So this isn't just about slightly faster payments then, is it?
Not at all. It's about Circle building dedicated, low-cost, high-speed rails just for stablecoins, trying to bypass traditional banking friction.
Right. Making USDC the default for digital dollar flows globally, it's a big strategic play. And they're not alone. Coinbase is boosting stablecoin stuff too.
Yeah, there's a broader push for stablecoin utility across the board.
But then you have Stripe. They seem to be taking it even further. Acquisitions, their own L1, aiming to bypass card networks altogether.
That's the vision. A full-stack crypto payment system. Direct stablecoin payments, programmable subscriptions.
And that DeFi yield on merchant float, letting businesses earn interest on their sales instantly.
Yeah, that's potentially huge for merchants. It's Stripe moving from just processing payments to becoming an actual on-chain payment network.
Wow. That's a fundamental challenge to the likes of Visa and MasterCard, isn't it?
Absolutely. It's potentially a whole new financial ecosystem they're trying to build there. Fascinating stuff.
Okay, but shifting gears a bit. While some are building, others are, let's say, testing the limits. Let's unpack this Monero situation.
Yes. The Qubic mining pool claiming over 51% of the hash rate.
Led by Sergey Ivancheglo, formerly of IOTA. And 51% control?
Yeah.
That's serious, right? Reorgs, censoring transactions, double spends.
That's the potential danger, yes. It gives theoretical control over the blockchain's recent history, and Monero's price definitely reacted, took a hit.
Yeah, down like 6-7% in a day, more over the week. So what was this? Qubic called it a stress test.
Right, that's their angle. They talk about their useful proof-of-work model, doing things like AI computation, and frame this as helping Monero improve.
But others weren't buying that.
No. Experts like Ledger's CTO were warning it looked like a live 51% attack scenario. It really highlights the vulnerability.
So it raises that core question for privacy coins, doesn't it? How do you stay decentralized and secure against concentrated power, even if it claims good intentions?
Exactly. It's that constant tension between innovation, features like privacy, and just fundamental network security. A tough balancing act.
And quickly, on the innovation front, we're also seeing some cool stuff in DeFi. Hyperliquid turning prediction markets into high-leverage perps.
Yeah, HIP3. Imagine betting on events with perpetual futures liquidity. Pretty advanced stuff.
And extended DX on StarkNet 100x leverage, lots of pairs. Shows how scaling tech is enabling more sophisticated trading on-chain.
Definitely. Pushing the boundaries of decentralized finance, making it faster and more capital efficient.
So wrapping this all up, it's clear the crypto space is, well, still incredibly dynamic, lots of innovation, more institutional money coming in, but also these ongoing security and scaling hurdles.
Right. And if you connect the dots, you see traditional finance adapting, DeFi pushing limits, privacy tech facing challenges. It's all shaping what digital economies might look like.
So the big question for you listening is, how do you see these pieces fitting together? How might these shifts change commerce, privacy, even wealth itself down the line?
Definitely something to keep thinking about as this all unfolds.
Absolutely. Well, thanks for tuning in with us today as we explored these shifts. We'll catch you on the next one.
Spoken Tech for your ears.